So what is a state tax lien? So in the intriguing world of state tax liens, we're going to unwind the complexities of this sometimes very confusing different types of liens that can be on a person, an individual property, or assets. In this video, we're going to show you exactly what the different types of tax liens that are out there, either asset tax liens, property tax liens, income tax liens, all the different things that can happen on a property, on an individual, or assets in general. By the time we get done with this video, you'll know exactly how to profit from every single one of these transactions. All right, so let's just talk about the different types of liens. Let's start at the top, big daddy of them all, which is a federal tax lien. Typically, this is going to go to uncollected IRS, Internal Revenue Service, income tax liens of some type. Now, let me tell you what happens. When the IRS gets to the point that they're going to put a lien against one of your assets, let's just talk about property specifically, everything's broken down. Okay, in other words, you haven't been talking to them, they haven't been talking to you, nobody's returning information. So in all reality, I get this question quite often. What about an IRS lien? Believe it or not, you don't see those that often because literally, as scary as the IRS is, and remember, they've got the biggest, advertising campaign out there, Al Capone, right? He went to jail because of failed income taxes, not because he killed a bunch of people. We've said this before. And so when the IRS comes in, they're talking to you, letters, people are corresponding back and forth. When they say enough's enough, that's when they will put a lien against the property. Doesn't necessarily mean they're going to be selling the property, but they're going to put a lien against the property, and literally nothing can be done with that property until that's satisfied, unless it's a property tax lien, and we'll get to those later. Okay, now let's talk about the ring down below that, which would be a state tax lien of some type. Now, I can't even say it's below the IRS, okay? Again, we have to go back to the separation of feds and state, okay? Every state has their own franchise tax board. In other words, they're collecting state income tax of some sort. Okay, I know some of you in Texas and Florida and Alaska, we don't have to, there's taxes. Okay, and we'll get to that in just a little bit. And let me tell you something. I talked about California, so let's bring that back up. In the state of California, okay, the state franchise tax board is a lot more feared than the IRS. I know of instances where they came in with SWAT gear, the whole 9 yards, because of failed state income tax. As a matter of fact, they used to hire college kids to drive around the South Tahoe area on the Nevada border, taking pictures of people's driver's license plates numbers on their car and corresponding to see if these people had California license plates, but were claiming they lived in Nevada, which is just across the border there in South Tahoe, for those of you who haven't done it. And then they'd go after them for evasion of state taxes. And the franchise tax board is not something you'd want to mess around with. Let me tell you something. I would much rather be talking to the IRS than a state franchise tax board. Okay, so they can kind of lean everything and they go real quick and it's not good. So typically what they'll go in is in some situations where there is a franchise tax, like I own a company, I haven't been paying taxes for my employees or something to that effect. You want to stay away from those. Okay, now there is no way to get into that and go in there and buy those liens against that. The state franchise is a completely different entity. Okay, so let's talk about county tax liens. I would say the weakest of them all. If you owe the county some money, they've only got a couple recourses, okay? It can be either against the property, meaning a physical property, real estate. It could be assets and what have you. Not a lot of strength in that because they don't have a lot of legal power to repossess things in those areas. The biggest lever that you and I can take advantage of is literally property tax liens. Okay, so when you look at property tax liens, it's kind of simple, if you will. The property owes taxes on it. Okay, who's ever occupying that property, owns that property, is responsible for paying those taxes. If they don't pay it, they'll put a lien against the property. If you don't pay that, eventually, they're going to go ahead and foreclose and take that property. So let's kind of unwind that a little bit. So once a property owner becomes 1 year delinquent on their property taxes, the county government can then put a lien against the property. That lien can be sold to the public. Because see, the county's going, look at 90% of our revenue comes from property taxes. If people aren't paying them, we need some kind of a lever to go for this. This has been around since longer than we've been a country. Okay, so they say, okay, if they don't pay, we have the right to put a lien against the property. It's not really against the individual. It doesn't go against the property owner's financial statement. It doesn't go against their credit. So there's actually kind of a win-win situation in this situation. Now, here's the other cool thing. The county says, hey, they haven't been paid for 1 year. We're going to put a lien against it. We still need the money. So legally, we're going to be obligated to put those up to the public. That's you and I, where we can give the money to the county. The county will give us a certificate, and that bears an interest rate. Now, this is where it gets really fun. It's going to bear an interest rate of 16, 18, even 25% to you and I. Okay, so in other words, I give the money to the county, they go about their business, taking care of schools, roads, fire department, et cetera, and I get this interest. Nothing's happening to the property owner. See, the property owner is given a grace period or a redemption period. Now, that redemption period can be anywhere from 6 months on the low side to about 4 to 5 years on the high side. Again, depending on the county and the municipality and the state. There's different layers to this. Now, if that person, that property owner, does not pay those taxes off, or somebody doesn't pay it off within that redemption period, the power of the county goes to you. In other words, you and I will have the ability to foreclose on that property, and everything on that property is eliminated. So if I go in to foreclose on a property due to delinquent property taxes, I am a superior position. All other liens and encumbrances are junior. Okay, think of a property tax lien as a phantom lien. It's always on the property. You and I just don't see it until somebody doesn't pay it. When they don't pay it, boop, it pops up, immediately taking a superior position to all other liens and encumbrances, including what we talked about earlier, an IRS lien. So when I go, because this is the only thing the county has. So they say, okay, we got to send out notifications to everybody that's got a financial interest. That would include banks, that would include the IRS, that would include any kind of lien that's been placed on that property. And they're given notice, hey, if someone doesn't come in and satisfy these delinquent taxes within the prescribed amount of time, probably 60 to 90 days at that point, then we will go ahead and whoever is the lien holder of that position and filed that foreclosure will end up with the property, and thus eliminating all liens and encumbrances. Now, the exception on the time period would be the IRS. They're given 120 days no matter what state you're in. But it doesn't matter if it's a big bad IRS or not. Their position is no longer valid in the property, and you and I will end up that property free and clear. This is how people end up with $200,000 and $300,000 properties for just a few years in back taxes. It happens all the time. There are over $450 billion, that's $1 billion in uncollected property taxes each and every single year. And here's the good news. Right now, I have a brand new course that will literally walk you step by step through the whole process. In this course, I will show you how to find the best liens available, find the best counties, how to execute and get those, and provide financial independence for you and your family. All you have to do is click the link down below. This is my gift to you, higginsmethod.com, and we'll get that out to you immediately. This is Saen Higgins saying good luck and God bless.